It's Wednesday. Let's chat. Hi, I'm Kanan Chandran, the publisher of stormasia.com, and this is our regular series of web chats. A happy new year to all of you, and thank you for joining this first session. And we're looking at an issue which I think impacts everybody. It's how we're going to use our money, and how the money is going to flow around. Money was always about cash, about the dollar note, right? But that's all going now. Instead, you're now holding up your phone to make a payment. And so what's that mean? That means that many people are losing touch with money. It's not something you can touch and feel anymore. It's in the ether. It's a wave of a hand, a press of a button, and it's all about the money flying all over the place. So the digital era has brought in that aspect of it, the fact that we've got so much money flying around now, and not actually seeing it makes it a bit more challenging for people to manage how they will work with their money. But at the same time, money is, in this form, is also very trackable, and it's become a very useful tool for organizations and systems and businesses to control how things are run, and they have a better sense of accountability as a result of it. So with digital payments, how is it going to change our world? What's it going to look like in the future? What are the pros and cons? In Show Me the Money, we are talking about the future of money and how we are going to use it. And, we've got panelists here who are experts in that area. John Hakim is the chairman and managing director of Moolahgoh, an eWallet app. John founded this fintech payment startup in 2017. It's offering B2B and B2C services in the fintech space. Kailash Madan, who is the head of APAC at Primer, a payment integration platform. He's based in Singapore. He has almost a decade of experience in the financial services and fintech space, including roles at Stripe and Citi prior to Primer. Okay, let me just start by asking each of you, what was the trigger point for you to start thinking that, oh, this is something that I think I need to create because it has value, it has benefits, and it has a potential audience?
Thanks, Kanan. I'm very glad to be here, providing my viewpoints or thought, especially in the payment landscape, not just within Singapore, but across Asia. So I'm the founder and CEO, as what Kanan mentioned earlier on, of a payment startup, Moolahgoh. We're quite a holistic type of payment company, in the sense that we actually offer our payment services across a diverse segment of customers, ranging from B2B all the way to the consumer payment services, right? So on the B2B side, we typically provide our cross-border money transfer services to our corporate clients that have a need for making FX payments internationally. And on the consumer side, we are one of the operators, e-wallet operators here in Singapore. We are lesser known because our e-wallet currently is more utilized by users that have a need to make cross-border money transfers. Although it has the capability of actually performing a lot of the e-payment functions that are available in other e-wallets in Singapore as well. For example, making in-out payment to merchants or to other individuals as a P2P payment. Yeah. So that's a little bit about our company. Yeah. So back to your first question, Kanan, what was kind of like the trigger? When Moolahgoh started, our focus was more on the B2B payment space. Obviously, we all know that on the consumer payment landscape, there's no lack of options, right? even at the time of 2017 or 2018 when we first founded Moolahgoh. But the B2B payment scene at that time was still pretty nascent, I would say, especially when it comes to digital payment. So that was kind of what triggered us, right? And then subsequently, after getting that experience of dealing with B2B clients, we feel that we could actually extend the benefits of our technologies, our platforms, to the consumer space, and that what then triggered us to offer consumer payment services.
Okay, cool. All right, Kailash, a bit about yourself, a bit about your business as well, and I suppose for you it'll be a question of how's the take-up been in this part of the world?
Yeah, absolutely. Thanks so much, Kanan, for having me, and really appreciate the invite. Yeah, a little bit about myself, as you rightly said. Been in the payments and financial services space for about 10 years now. Started my career with Citi, and then spent about 2.5 years at Stripe in Singapore, talking to a number of merchants in the Asia Pacific market on what they want to do in terms of scaling their operation, reaching new geographies, and increasing their revenue basis, as any business would want to do. And then made the switch to Primer about a year and a half back. Primer, and now I'm currently leading APAC for Primer, based in Singapore. So we're a UK headquartered company. We have about 120 employees globally, spread across about 30 countries, fully remote first, and target 3 main geographical areas. So Asia Pacific, the market that I lead. We also have operations in Europe, which is the EMEA market, and then North America. So that's how we're split globally. And essentially what we offer is a unified technical infrastructure for merchants. So we're a B2B platform. So we work directly with merchants, and we help them to consolidate their payments and commerce infrastructure in one single underlying technical interface, right? So if I were to help you visualize this, think of any merchant who operates in the Asia Pacific market, right? Just operating in Singapore may not solve all their revenue requirements. They may need to do business in Singapore, Southeast Asia, then go to Australia, New Zealand, maybe India, China. Now, for this particular merchant to reach consumers in all of these markets, they need to have a number of payment services available on their platform to help their consumers pay. It does not stop only at payments, because you have complexities like cross-border, like what John mentioned. Then you may have complexities around fraud. You may have issues to take care around shipping and logistics and loyalty and rewards and gift cards and reconciliation and chargebacks. So all of these, the complexity just keeps increasing, right? So that's where we come in, and we provide merchants a single unified interface where they just connect to us once, and then they get access to a number of services down the road, all through a click of a button, which would normally take a month or 2 months for them to activate. Instead, they can just do it by the click of a button. Now, to go back to your question on Trigger, I think the founders come from PayPal and Braintree. A lot of the founding team comes from payment backgrounds, the likes of Stripe, Adyen, Checkout.com, and WorldPay. So what we saw working in these companies is that merchants, as they grow and scale, their complexity increases, right? They need to work with 2 or 3 different acquirers to diversify their risk. They need to have different services enabled in different parts of the world. And there's no one unifying infrastructure. So that was the inspiration to start Primer. And fortunately, the uptake has been phenomenally good so far. More so in APAC, just because of how the landscape is here. It's extremely fragmented, right? There's no unifying regulation which ties all the markets in this part of the world. Indonesia has 10 different payment methods which are popular, which are completely different from what we see in Singapore to what we see in Philippines, right? So that's where the complexity increases. And because of this fragmented market, the uptake for a product like Primer has been extremely encouraging so far.
Okay, great. So you're both fulfilling a need with what you do, right? So Kailash, I just wanted to find out, you take the variety that's out there on the ground and provide a means of them communicating through you to the business, right? So it's a benefit for the business That's correct, right? I mean, that's a correct assumption. So when that happens, why don't you just go on the ground and offer it to everybody, so that you know there's only the one thing that you have to worry about, rather than having so many different options?
Yeah, I think just one thing to clarify there, right? What we give is a technical infrastructure. So we provide an open and agnostic framework where different services that are out there in the market. So any cloud-based service. So it could be Moolahgoh, it could be Stripe, it could be an Adyen, it could be a WorldPay, anyone, any cloud-based service which offers an API. So we have an open and agnostic framework through which we connect to these services, right? Now, a business, they would want to consume 10 or 20 or 30 such services across their entire digital transaction flow, right? So in today's world, for them to do that, they need to maintain 10 or 30 different integrations, one by one to each of these services, and then have a way to consume these multiple reports. That's where the complexity comes in. Instead, what we are doing for them is they just connect to Primer once, and then we connect to all of these services downstream. So the win-win scenario that you mentioned is both for the business as well as for the service, right? Because for the service, we offer faster activation of their services with the merchants they work with. And for the business, we give them access to a unified access to a number of services that they either consume today or they may want to consume 3 or 5 years down the line, essentially future-proofing their business.
Okay. So how many different services are there that you are consolidating, and what percentage of the global number is that?
That's the most exciting part, right? This is just tending to infinity, because any cloud-based service there is could be a connection that is offered on Primo. And the way we've gone about building these connections is based on merchant requests, right? So the merchants we work with say, hey, I want you to enable XYZ service because I want to use them via your platform. And then we go connect to them. So yeah, it's an open and agnostic framework that we have built. It makes it very easy for us to add on new services. What we're also building is a reverse concept, right? So we have this framework, and then services can host themselves on this marketplace of sorts that we have built. So think of it as an app store where all services list their offering, and then a business can just consume whatever they want depending on their business requirements.
So how many payment methods do you deal with?
In excess of 100 at this point. And specifically for APAC, most countries are covered. So what we try and do is offer critical mass in every market that we operate in. So a merchant will get access to a large base of consumers, at least 80 to 90% of the consumer base in the particular market they want to target. I can give you an example of a merchant called Zenium. Must have heard of them, very innovative dental company. They manufacture aligners. They were operating in 3 markets, and they turned on Primer, and they expanded to 6 more new markets in like 3 months or 6 months, right? This is typically not possible as quickly as they did, just because you need to go and establish these relationships with these services, then integrate with them, and then turn them on. But here it's just a click of a button, and then you get access to this whole new market where you get additional revenue. So that's the power of the platform.
Okay, great. It's an accelerator of sorts as well then. Fantastic. Yeah. So for both of you, I just want to know, what are the challenges and the opportunities that you see with the business and down the line? Let's start with you, John. What do you see as the challenges and opportunities for Moolahgoh?
I guess I'll answer that from digital payment angle. Because I'm pretty sure the challenges that Moolahgoh, our company, faces would be pretty consistent with other types of payment companies as well. I think the key thing that obviously there are many factors. There are many things that are always keeping us on our toes. One of which is obviously the pace of the changes in the industry, right? It's lightning fast. Sometimes it's actually quite difficult, even for us to kind of keep up with the pace, right, of the changes in the industry. Kailash mentioned about more than 100 payment methods. And that's exactly the kind of scale of change that we have to grapple with. The other thing is also bad actors in the industry, fraud, scam, which is a big thing, right? Especially, even in our own home context in Singapore, as I'm sure you've heard, Hanan, some of the cases that made big headlines last year with the banks and all that, right? Is definitely one big challenge that we have to deal with in our industry. And it's not something that is very straightforward, to be very honest, for payments companies to deal with, because it requires a lot of parties involved in the entire, transaction life cycle to play a part, right? We, as a payment company, we can do our part. We can put in the most secure processes, technology, safeguards out there. But if the users of such technology, right, kind of, don't play their part in terms of ensuring that their passwords, OTPs are not being shared with any third parties, that sort of thing, then whatever safeguards that we can put in place can be easily, right, overcome or avoided by the bad actors. So yeah, I mean, fraud and scam is definitely one thing that is on the top of our head.
Mm. So essentially, it's human failure, right? In that case, it's security. A lot of it is bad habits that people don't want to change to protect their own circumstances. Would that be correct, John?
I guess there's definitely a little bit of that, but I think, um, you know, it's a very difficult, challenge to solve, unfortunately, at the same time, right? And the regulators know, every players in the industry know, like what you said, there's a bit of bad habit, but there's also a bit of, as technology progresses, advances, especially in the area of digital payments, whereby, the objective, in payments is to make everything faster, more seamless, as little friction as possible, because we ourselves, all of us are ourselves consumers, right? We do buy things on e-commerce websites like Lazada, Shopee, or whatever, right? What we demand as a consumer is, when I press checkout and press pay, right, I want the item to be at my doorstep right now, right? And the payment process is part of that value chain, right? No point for the delivery of the physical item to be super fast if the payment process takes a long time, right? So us as payments company, we try to come up with something that is the most seamless, the least friction. But then there is a downside to that, right? That means that your money will leave your wallet or banks or credit card even much faster, right? So then there's a responsibility for us as consumers, right? To ensure that, we protect our own personal information, identity, and all that, so that we don't fall prey to the bad actors out there.
Okay. How about in your area, Kailash? What are the opportunities and what are the challenges?
Yeah, I think what John mentioned, quite complementary to what we are seeing. A lot of the challenges he listed, we see as opportunities for our business, because businesses like John's, they're grappling with changing customer expectations and trends, right? Like mobile penetration is increasing. Asia Pacific is a largely underbanked market. So you see a lot of alternate payment options like your wallets and bank transfers and convenience payments and buy now, pay later, as opposed to credit cards, right? What this means is consumer expectations are much higher, and as John rightly said, the minute they come to the checkout page and see that pay button, they want to click pay and the transaction needs to be done. And if it's a physical good, it needs to be at their doorstep. So they're quite unforgiving that way just because of the demographics. Like most people are between ages of 18 to 35, high mobile penetration rates. So they're quite unforgiving that way. And what that all means is, as a business, you need to be super agile and you need to have the flexibility to adapt to these new payment trends and ensure that the buying experience you offer to your consumer is the best possible one which is out there in the market. And that's how you differentiate yourself from competition. And that is what we see as the biggest opportunity for us, because that's the piece of the puzzle we are trying to solve, right? So we don't get involved in the flow of funds, or we don't have to be financially regulated. We're a pure play technology company which enables businesses to have access to these tools. So that I'd see as a big opportunity. On the flip side, I think as a challenge, what we're seeing is more on the macroeconomic side of things, right? You look at the global economy right now, I think interest rates are quite high. There's a high inflation kind of environment. Our discretionary spending is low at this point, although tech spend is expected to rise at about 6% in 2023. I think it's more cautious now, with a number of stakeholders being part of that buying decision. Right now, what all this means is the appetite for buying services is largely driven by how much additional revenue can it bring to my business, how much operational efficiencies can it bring about, and John touched upon this, I think, is how much of my fraud and risk can it help mitigate, right? Like if you tick all of these three boxes, that is where you will have a strong advocate within any buying organization to make that purchase. So I think that's a challenge which most tech companies would need to overcome and demonstrate when they're having these conversations with businesses, to show them value around these three key pillars and how they can help achieve these.
Okay. What are the pros and cons of physical versus virtual payment?
Yeah, couple of things that come top of mind, right? Like one is financial inclusion, right? So I think with digital economy booming, a lot of people have now been given access to participate in this economy. I touched upon this a little earlier, like wallets and payments via convenience stores or buy now, pay later. So all of this is possible just because of one mobile phone in their hand. Many don't even have bank accounts, but still they have access to these payment options through which they are able to participate in the digital economy. Second is for businesses. A lot of them are able to come online, and by virtue of this, they're able to generate revenue and participate in the economy. And this lowering of that credit gap that we see, which existed about 5 or 6 years ago. And all of this, I think, largely points to the trend that e-commerce is growing year on year. I think it's grown 5x from 2016 to 2021, expected to grow 3x in the next 5 years again, expected to touch about $2 trillion by 2030. So all of this points to the fact that the world is going in that direction, and digital payments is just following that trend. I think the second big benefit that comes from digital economy is how all of these are able to ensure that there's regional economic and social development, right? There was a Google-led study which I recently came across, which said it created about 160K high-skilled jobs and indirectly supported about 30 million jobs, because there were so many platforms that came online, which you just look at restaurants in Singapore, for example, right? Like all of these have adopted a table ordering system where you just scan a QR, and a lot of restaurants come online, right? And they're able to do business. A lot of it was forced because of COVID, which accelerated their digital transformation journey, but it is there. It is still existing now, even in the post-COVID world. So I think just job creation is one other key pro that comes to mind. John, anything to add? Please feel free.
Yeah, I mean that food ordering, scanning the QR code thing. I don't know about your opinion, but sorry, I personally hated that. I'm still more of a traditional, nicely printed menu kind of guy. But okay, yeah, I was smiling when you asked that question, Kanan. I think, in this day and age, it's got to be you can't, firstly, you can't get away from digital payments, right? I think there are some establishments out there that would only accept digital payments in the first place, so they wouldn't even accept cash. So our society has moved to that, to that age whereby cash is no longer king per se. I mean, the benefit, apart from what Kailash mentioned, obviously there's also talking about the pandemic, there's a hygiene factor and all that. It's just, you know, it's very inconvenient, right? If you have to actually carry a stack of cash in your wallet. So digital payments definitely makes it much more convenient, uh, easier for definitely the online commerce that is very common these days as well. But digital payments, Kanan, I think we always tend to when we ask this question, there's always this mindset that digital payment is something very new. It is actually not new, right? It's been around for God knows when, since when, right? The obviously the very first the first form of digital payments that a lot of us in Singapore uh, is very used to is obviously the credit card and the debit card. There's also a form of digital payment. In the past, obviously, you had to sign a slip, but these days you can just do a pay wave and check out very easily. So it's not something new. It's just that recently, maybe in the last 5 to 6 years, um, there are a lot of e-wallet, the automatic payment method, on top of the credit cards and the debit cards. So we now have the wallet that make it seem that only very recently digital payments have actually started, catching fire, but it's actually not the case. And in Singapore, um, 90, if I remember correctly, maybe something about 90% of the population actually owns at least one credit card or multiple credit cards, right? So in Singapore, the Singapore society is already very, very digitalized when it comes to payments. And outside of Singapore, other Asian countries like Indonesia, Malaysia, Philippines, and all that, their digital payment adoption is also increasing very rapidly. Not so much on the card side, but on the e-wallet side. The reason is because it's still much more easier for people in those countries to actually own an e-wallet account as opposed to a debit card or debit card account. And this goes back to the point that Halas was making about inclusion. So the emergence of the e-wallets and all that has actually benefited a lot of the unbanked and the non-bank population, especially in the developing countries.
Okay, yeah. So it's a speed, it's expediency, it's efficiency, and all that sort of stuff. In the past, you was $10 for something, you paid cash $10, you got your stuff. Then with credit cards, some of them had to pay a certain percentage of service fee on top of that. With the e-wallets and all these digital payments, is there a fee that is tagged on to this, which adds to the cost of a product so that it's no longer $10, but maybe $11 or more? Is that a factor? I mean, because you guys are developing things and you can't develop them for nothing. It is a business after all. How much more does it cost the consumer to use the digital payment as opposed to physical cash?
I can take a step at this first. Yeah, I mean, there's definitely cost. But having said, I think, the good thing about digital payments at the moment is that even though the adoption rate is already pretty high, especially in the context of Singapore, but you can see that there's still a lot of a lot of encouragement and push from the public side for even more people to start adopting digital payments, right? And therefore, at the moment, I think a lot of the infrastructure costs that are related to digital payments and all that are kind of like in a way being absorbed, by the infrastructure or by the payment providers. So on the consumer side, the move towards the transition towards digital payments shouldn't cost them any more than what they were experiencing when handling cash, right? But I mean, if you think about it, we just don't think that way. But when we were, doing cash payments, there's also a cost on our side, right? The cost is our time. The cost is our effort to actually walk to an ATM machine, queue up there, right, and to withdraw our cash. So there's actually a cost. It's just, it was intangible, and then therefore we didn't bother to think about it that way. But for digital payments, we kind of make all of that more convenient. Yeah, I mean, depending on the digital payment method as well. When it comes to card, right, much of the cost is actually borne by the merchant. But with other alternative payment methods, the BNP and all that, there may be some cost, that the consumers will have to pay in exchange for that convenience.
Kailash, would you like to add to that?
Yeah, I think John touched upon this in most aspects. Just a slightly different way of putting this. I think we can look at it from two perspectives, right? Like one is on the consumer side. I'd go to say that as opposed to having costs to drive digital adoption, there are more benefits, and you see rewards such as either cashback coming in from your credit card issuer, or you get miles, or if you happen to use an eWallet, you may get some amount of cashback back into your wallet, which you can use on that particular merchant or a different merchant. So all incentives are aligned to ensure that these consumers adopt digital payment options rather than cash, because of the costs of carrying cash, as what John rightly mentioned. Now, then someone needs to bear the cost of this digital payment transaction, and typically that cost is borne by the merchant. Credit cards, of course, tend to be the most expensive of the digital payment options available. But I think the benefits, as opposed to accepting cash, is one, it's safer because you don't have to actually hold that physical cash, go to a bank, deposit, ensure settlement happens. All of this is automated by the technology providers that are out there in the market. So there's settlement, which is taken care of. And then you have alternate payment options like your wallets and bank transfers, which are pretty much instant, right? Like as a business, I would rather have my money in my bank account either today or tomorrow than wait for 4 or 5 days, having some level of physical/operational labor to ensure that it happens. So I think weighing those benefits, it makes sense for merchants to also ride the digital adoption wave. So for consumers, it is a no-brainer. I think for merchants, it's just access to a wider range of consumers and also faster settlement. I think Ravi Menon spoke about this as one of the key themes, right? Like one is cross-border payments and the second one is settlement. So I think settlement is a key theme that keeps coming up, is how fast can I get the funds that I am owed into my bank account? And that's what a lot of these digital payment options do for these merchants.
Yeah, okay. Do you see a time when there'll be no more cash at all? And do you have any idea when that might be?
No, I
when
don't
everything
think
is
so.
digital.
I don't think so. And cash would definitely be still around. There's definitely a section of the society that will still be very comfortable and very much more comfortable in using cash as opposed to digital payment methods. And the government will have to cater to that, right? And depends on which countries you're talking about as well, right? I guess when you answer that question, I think if you are thinking of it from a Singapore point of view, then the cash, the usage of cash would definitely come down very substantially. I mean, again, remember correctly, I think the last report was the ratio between cash and digital payment usage in Singapore. Cash is now only slightly over 10% compared to digital payments in terms of ratio. So that will continue to come down. I mean, it's already pretty low, but I believe that it will still continue to come down, but it will never ever go away, right? In some other countries, um, cash is still pretty much required. Yeah.
Okay.
Yeah,
Yeah.
yeah, I would tend to agree with that. I think it's quite far-fetched at this point to think that cash would go away. Especially there are some economies, I mean, even advanced economies in Asia, like Japan, right? High cash penetration, quite counterintuitive, but they have high cash penetration. Even markets like India has quite high cash penetration. So I don't see it going away, but definitely the trend points to a scenario where the adoption of cash is reducing, and that's going to be replaced by digital modes of payment. Cash equivalent, but non-cash.
Okay.
And I don't, sorry, just to throw in one last quick one. I don't think it should go away as well. It should, we should definitely keep some cash around as a backup plan, right?
Is that a romantic sort of perspective of it, of cash?
Yeah, I mean, yeah, if you like the feeling of money in your hands, yeah.
Yes, it's quite tactile, isn't it? As we move forward into what is looking like a very difficult year, we did a series of interviews with people in different industries, and the general feel was it's going to be a tough one. How do you view 2023 in terms of growing your business? Do you see a lot of challenges which would hamper your anticipated growth, or do you think this is where the opportunity is likely to be for you to maybe grow even more? Kailash?
Yeah, I recently read an article, I think a couple of days back, which said the greatest companies are born out of the worst economic recession. So I think post 2008, a lot of the large mega cap companies we see today came out of that recession. So I would definitely look at this as an opportunity. Companies are still out there. I think the only change in mindset that's going to happen from maybe the year before last to last year to this year is going to be sustainable growth and a lot more focus on profitability than growth at all costs, right? So that's going to be the theme, and how businesses are going to achieve that is by digitizing to optimize, right? So you have to digitize to ensure that your reliance on human and operational capital is minimal. You deploy your tech resources to the most value adding parts of your business, which is your core business operations, and try and find solutions which can automate a lot of your other operational aspects of the business. So tech spend, as I said earlier, is going to grow by about 6% as per Gartner for the year. So I think that will happen. Just the number of eyes on this tech spend is going to be higher to ensure that there's clear ROI for the business. So I definitely see this as a challenge. It's just companies that operate in a more mature manner, and it's the age-old saying which says continuity of business and the first principles of operating businesses, which is drive revenue, keep costs low, and keep risks low. I think as long as you do the basics right, you should be able to turn the tide.
And how's that? What does that spell for employment, though? You're going to see employment numbers coming down as a result of that sort of approach, because as you automate more and use AI, maybe for many aspects, there'll be a reduction in the need for the workforce, right? People in the workforce.
Could be, but I think the way we need to look at this is more focused hiring in the areas you want to invest in, right? Like you may have certain human capital in areas which could be automated, but you may want to redeploy them into areas which are actually revenue generating for you. So it could just be restructuring of your resources from one function, which could be a cost center, to another function, which could be a profit center. So I wouldn't say there would be reduction in workforce needed for every company. There could be, but strong reason not to. But I think it's more restructuring and how you position your resources to the most optimal parts of the organization.
Okay. John, What are your views on this?
Yeah, when it comes to Moolahgoh, our plan obviously is to find opportunities to grow, and I think the key thing that we are very closely keeping an eye on is more around the macroeconomic sector. There's quite a lot of talk, and the stock market recently is reflecting that potential recession in US and Europe, and if there's going to be any spillover to China, to the rest of Asia, then definitely I think the payments businesses would not escape as well, would not be untouched by that. But barring any kind of like very significant downside impact from those events, our plan is actually to there's definitely still lots of room to grow, especially when it comes to our e-wallet business, our e-wallet product. You know, is growing in user numbers quite rapidly, because we've we've done quite a number of integration with a number of global partners. So one key factor which I think is very critical when it comes to e-wallet is the notion of interoperability across countries, right? So and that's something that we are very much focused on. So hopefully in the next few months' time, I would have the pleasure to actually announce to you guys that the Moolahgoh e-wallet would be able to be used in countries like Indonesia, Malaysia, Vietnam, and all that, which is something that we are currently working on. Very exciting project.
Okay. What does it cost to set up your respective operations? And I guess you're still building, right? So what is the anticipated cost involved in that? Are you at liberty to discuss that?
I mean, yeah, the development, the technology cost in our organization is the largest chunk of cost component. So I am, and that's the investment that we have to make. Being a fintech, obviously, we have to invest to innovate, to improve our services, our platform, our technology, because we not only provide that to our direct consumers, we provide that to our other payment partners as well, other payment providers, and other corporate clients. So yeah, and going back to the point about at the start about this industry is changing very rapidly. So in a way, whether we like it or not, we have to invest to actually keep up with the pace of the industry. Yeah.
So it's an expensive industry to be in, right, Kailash?
Yeah, I'd say for us, we're more of a global organization, right? So we spend on technology, infrastructure, and employees in terms of new product development that can scale across the globe. I'd say the initial fixed cost is there, and then once you hit that scale, it then leads to hockey stick growth because unit economics kick in. So I think it's a good space to be in for us, which is SaaS. So we're just hoping that we're able to ensure that level of growth comes in sooner than later.
How much of a blip is the current situation, COVID and everything else, to that hockey stick growth? Or has it accelerated it?
Yeah, COVID's been a big accelerator to the digital economy, right? And more businesses come online and you try to solve some of their problems. So it's going in the right direction, and hopefully we'll be able to go on that pathway.
Are you satisfied with what you've achieved in your respective roles and in the business? And what and when would be your next big announcement? John?
Yeah, we're never satisfied. So we are always constantly on the move, seeking out, new payment technologies, new things out there, what we can what we can invent on our own as well. So yeah, there's still, I feel that the industry still has a long way to go. We now talk about cryptocurrencies with the recent events, God knows how that's gonna evolve in the next 6 to 12 months. So keeping a close eye on that. In terms of announcements, as I alluded to earlier, hopefully we'll be making some of that. We actually just concluded integration partnership with one of the largest um, digital wallet players in China. So hopefully that's something that we can share in very short period of time. Yeah.
Okay, great. Kailash?
Yeah, I think we've been around in Asia for about a year and a half, made steady progress across verticals. So retail, e-commerce, travel, ticketing, cryptocurrency, fintech, gambling, gaming. So we've had some success in all of these verticals. I think in terms of markets, we've had steady progress in Southeast Asia and Australia, New Zealand. Of course, what we want to do is have a more market leading position in all of Asia Pacific. So this includes markets like China, Hong Kong, the Greater China region. It could include South Asia, so the Indian subcontinent, Japan, South Korea. So I think that's going to be our focus to ensure our footprint is quite strong in all of Asia Pacific in the next year and a half. So it's never done until it's done. The journey continues.
Okay. And you're a first mover in this regard, right? In terms of what you offer, Kailash. Competitors over your shoulder by any chance?
Yeah, we are the first mover. So both in terms of payments and commerce automation, we've been first in this space. I think we've had a head start of about a year and a half, 2 years, and it's always good to see competition come up. It's just a validation of the idea that you have and the problem you're solving. But it's just that how quickly can we continue innovating on our product and ensure that our merchants see value in what we are offering. So that's what we're focused on doing.
Okay, great. Well, gentlemen, I wish you both all the success in continuing to grow Moolahgoh and Primer. Thanks for sharing your views in this session. I think money will always be top of everybody's mind because it makes the world go round, and it does manage to achieve a lot of things for us.